Hey Tony, how's it going? How's it going? Hope everything has been well with you. I didn't do the weekend call like I was supposed to this past weekend. But had a conflict come up. Oops. Oh. All right. So what I'm looking at right now is I am looking at a scenario that I think could potentially play out. Um, So coming into New York session, again, we came into the session, we had a bearish London session. We're still very much bearish in the higher time frames. I know this is a lot of chop right now, but go to the higher time frames and we can see here that we're pretty much in a downtrend still. So we're trying to chase after sell side liquidity. Remember, we go up for buy stops and fill holding balances. We go down to get sell side and sell stops, right? So we're pretty much and still in a bearish condition on the higher time frames until we still take out old highs and that type of thing. So again, coming into the day, London session was bearish, right? And so ideally what we want to see here is the same thing with New York session, right? So coming to the 15-minute time frame, again, we ran an old high, right? Because we know that each session is going to have power three in it, right? So obviously there's power three for the day, right? Accumulation. Oops, where we at? Accumulation, manipulation, distribution, right? For London session. And we know also the bigger day is going to have the same thing going on. And even within New York session, we have our own mini power three, right? So we came out, we started here, we opened up, we ran up higher, we ran an old level of buy side, and now we want to see this thing fall apart, right? So again, you need to be asking yourself, where's the money at? Where's the money at? And so once we took out that old high, what did we get, right? We took out this 15-minute high. We know there's buy side sitting above here. So a lot of times I like to draw money above these old highs like this, right? Because we went up and grabbed that money. And where's our sell money? Well, we know at the low of the day, right down here, which is where I have my stop. We also have low sell side liquidity under all of these lows right here. So there, right? These are all areas where we know there's going to be buildup of sell side liquidity because we know that traders who are in longs right now, they put their stop losses under the low. If you're in a buy position, your stop loss is going to be a sell order, right? Because you're trying to sell out of that buy the trend. So we know there's sell side liquidity under all of these lows. The reason I entered in where I did is because I'm going to give this some breathing room. The reason I entered in where I did is because we had a run of an old high, right? Then we broke market structure, right? This is our break of structure right here. Boom. And what else do we have? a fair value gap that opened up right here. I didn't draw it out. But that's our fair value gap. A little bit lower. So ideally, and we have an order block right here, right? So this is signifying our change in state of delivery. So ideally, what I want to see is the market really respect these levels. Again, in case I'm wrong, my stop is above this high, right? Ideally, if you're really confident, you could put it over the candle that forms the imbalance. Or if you're, conservative, then you put it over the high, right? Obviously, this is going to be less of a loss than right here, but in theory, if you're right about this, the market should not run up here because we grabbed the money that we needed to grab, and now we're heading lower. Again, I apologize about not kind of letting people know about the stream beforehand. But in 2025, I'm probably going to do a better job of mapping out when I'm going to trade and when I'm not going to trade and kind of get that to you guys beforehand. I'm going to try and do more live streams. So like when I'm going to trade live, I guess, is what I want to do for 2025. Really have this part of the education more formatted out. I think there is there's a lot of opportunity there, and I think people learn best when they see examples rather than like cherry pick charts. So this looks good so far. Why does it look good? Let's zoom in on here and see what's going on. So a couple things. If we zoom in on this price action here, obviously this fair value gap, we're respecting consequent encroachments right on the 50% level. What I don't like is how price traded above. And I'm going to zoom in a little bit more so you guys can see how price traded above the consequent encroachment of this wick right here, right? So I don't like that we closed above, but since consequent encroachment of that fair value gap is right there as well, it's kind of a little bit of saving grace. So we have consequent encroachment of the wick right here, consequent encroachment of that fair value gap right there. So it's a good sign. I took a trade yesterday and I made about $1,700 live. That's yesterday. So today, these trades are actually going to be taken on a funded challenge. I'm not trading live today with real funds. I think I actually might be done trading my account for the year. I'm also scaling into another contract because I'm starting to see the rejection from the zone. I think this could be potentially a good trade. We'll see though. Or it might have just got me. I think it might have just got me. We'll see. Either way, this is an account that, again, when I make my money for the week, right, whether it's 1,700, $2,000, usually my winning trades are going to be somewhere between $1,500 and like $2,500 on my like smaller personal account, right? It's not counting the funded accounts and stuff like that. So somewhere between $1,500 to $1,800, like that 2K range, 2 to 3K is really the goal, right? And so when I hit that goal for the week, or if I'm very close to it, I don't go back in the market, right, with that live account. I go back with accounts that I know that, again, they're not going to really take my money, right? So funded accounts, funded challenges, those are going to be like the accounts that I trade after that. So again, the job here is to grow your capital and preserve it, and really taking high probability setups and not always risk yourself by putting yourself into the market. So again, I made I think it was about 1,700 yesterday. Why would I go back in the market? What is 1,700 times 52 weeks in a year? That's $90,000, right? So we're talking about basically the equivalent of someone that makes $90,000 on a $1,700 a week trade, right? So why put yourself back in that position where you might lose that? I'm gonna move my stops a little bit closer. I'm actually gonna move it to right above the candle that caused the fair value gap. Again, stop losses, if you're conservative, go above the high of the structure. Or if you're a little bit more, have a little bit more risk on the play, or if you have a little bit more confidence in the trade, you can move your stops to just right above the candle that start the imbalance. Tony, you've been on here faithfully, man, for like an entire, I don't know, like the last 6 or 7 months, man. Um, I'm gonna, I'm happy. I hope you're getting a lot out of this, man, because this is life changing stuff, man. It changed my life. And the ability to pull out basically six figures out of the market, in a few hours a day. Not saying that obviously this is gonna you're guaranteed, right? I can't guarantee you that you're gonna make money doing this because a lot of this stuff has to do between your ears, right? And not necessarily the chart work. The chart work is like 60% of it. The other 50% is being able to kind of like manage your mental. So I can't promise that you're gonna be able to make money, but I hope you're getting a lot out of this, man, because this changed my life, man. And the ability to pull, $1,000, $2,000, whatever out of the market at will. I mean, that stuff changed my life, man. It really has, and it makes my life a lot easier, and it makes me trading, you know, a lot easier as well. And it makes life a lot easier. And when you have a obviously, if you still work a job, you can still do all this stuff, but having this extra income on top of the job, right, changes my life. And obviously, one day I'm going to leave that, and I'm probably going to do this full time. Um, but I'm not really in a rush because one, I actually like what I do, right? And two, uh, having that extra income really kind of helps a lot. So, so right now, what's going on right now? Price is just mitigating in this fair value gap. Usually, what happens is people get scared on chop, right? They get scared when they see price kind of ranging around like this. How you should read this is that price is still kind of mitigating, right? And so when we talked about these fair value gaps, remember we talked about the idea here that inside of these gaps are going to be unmitigated orders, right? So just to kind of give you guys an example, we talked about a civvy, right? Is sell side imbalance, buy side inefficiency. Um, so inside of this gap, right, it's a sell side imbalance, buy side inefficiency. So what that means is too many sellers, right? Selling pressure, not enough buyers, right? I hate the term selling pressure because it implies that people move the market up and down. That's not the case. But I'm just going to use it for the context of this conversation. So too many sellers, not enough buyers, right? Getting their orders fulfilled. So what happens? The market has to come back in and mitigate these gaps. So what we see here is price is really just mitigating that gap. Again, when you're watching these wicks, it's this. I know this can look real scary, right? But um, notice how all the bodies are staying inside the fair value gap. So I say this a lot. I know some other friends say this a lot when we trade, but bodies tell the story of price action. Wicks do the damage. So if I go down to a smaller time frame, start to see how we're making downtrending motion here. Go up a time frame. Look at all the bodies are respecting that gap. That's like beautiful to see. So again, we could get stopped out. We very much could, run up here and take this high out. But I love how all price action is really staying in this range. So coming up, we have the 945 or 950 macro in about 3 minutes. So I would imagine that if we're going to make a move down, it's probably going to happen in the next like 20 minutes or so. So usually, again, when we wait for these macro times are essentially, well, let me backtrack. A macro is essentially like a computer program command to do something, right? So if you have a background in engineering or anything like that, macro is just a command, right? And so what happens is these macro times are like pre-recorded times where the market is going to make movement, right? It's going to run for liquidity. And so when you have these times, um, it makes it a little bit easier to kind of coordinate your trading. So I would imagine in the next like 3 or 4 minutes, we'll see a push. Either we're going to get stopped out, right? Or we're going to get, um, you know, run towards these highs. I'm actually going to scale down just a little bit. I want to get out of one contract again, because this is a funded challenge. And I want to make sure that I'm not like violating any drawdown risks that I have. And so I'm a little bit more aggressive with these. So let's go to three accounts. So I want to buy one. Okay, cool. There we go. And if things start to go our way, then I'll probably scale in again. But I like this. I mean, if you look at this from a higher time frame perspective, we really are failing to get above this old high, right? And so to me, how I read this, how I interpret this is that the market really was trying to run up above old highs and grab liquidity and then go lower. We also have, now that we took out this old high and we have these big wicks, again, consequent encroachment of these wicks, right? And so I'm looking at all these things and I'm kind of like building an idea or building like a thesis as to why like the market should go down, right? And so this is how I would love everybody to start reading the markets, right? I would love for everybody to look at these things and see like, okay, cool. We just grabbed liquidity, right? We're bearish in the day. We should be heading down. So it's about 9:49 right now. So I want to see something happen in the next like few minutes or so. Again, that macro time is going to be 9:50 to 9 or to 10:10, right? And so a lot of times you'll see price not really have any type of movement until then. So what do I want to see here, right? I want to see the market give us a close below this fair value gap, right? We haven't had that yet. So the minute we close below this fair value gap, it's going to paint the picture that this is a really good sign the market's going to continue to go down. So not only do I want to see this close outside, I want to see this start painting additional imbalances right? And reasons that we should stay in this trade. Like this. Exactly like this, right? So again, when we talk about scaling into positions, right? I want to scale in when I have a confidence that the market is going to continue to run lower. Right. So I'm going to add back that initial contract that I had right there. I'm going to scale in one more. Again, I want to see like a fair value gap open up on these smaller time frames. Let me hop down to the 1 minute. And I want to be surgical with these entries, right? So I want to be able to see that the market is really giving me something. It's giving me more confirmation that things are going to go my way, right? So we're well within that 950 macro time now. You're going to start to see price really start to act a fool and really start to go lower. This is a gap, right? So that's another sign. That's another good thing right there. So whenever we see volume imbalances or gaps, again, this is kind of giving us the idea the market's going to continue to run. And it's kind of giving us another layer of things. So we opened up 2 fair value gaps pretty much since then. So this is a really good sign the market's going to continue to probably go our way. Again, when you're trading, this is a top step challenge that I'm trading right now. The max with top step when it comes to contracts you can have open is 5, which is not really a bad thing, right? Because you stop yourself from over leveraging. But we're currently up what looks like 3 pips. Right, so this is like a 20 pip move. So it'll be close to $1,300, I think, if we get here. $2025 is gonna be it's gonna be a fun year, man. It's gonna be a really, really fun year. It's funny. It's funny, Tony. I didn't even see your message and I said that. But 2025 is gonna be a really fun year, man. So hopefully this is starting to sink in and starting to make sense. So that 10-10 macro time is the end of that first initial macro. Usually macros are going to be the last 10 minutes of every hour and the first 10 minutes of every hour. And this one is the main one because it coordinates it along with the market open, right? So so if I could scale in more, I would be scaling in right here. Why? Because we came back up and tested that 2-minute fair value gap. So if we're looking at things in a higher time frame perspective, this is that 15-minute fair value gap. We're also seeing what else are we seeing here? So I'm gonna get rid of this off the 15-minute time frame because there's a lot of stuff on my charts now. Visibility. It's 15-minute time frame there. Oops. There's also one of the reasons that um, I start to like kind of scale my trading back for the rest of the year because I mean, the market started to get really choppy in December. 50 seconds left in this candle here. So this looks good. Going back to that 15-minute time frame. Yeah, all this happened in 2 minutes. Yeah, this is crazy actually. So yeah, so this looks good. Just want to see where this closes. 15 seconds. Also, your account, I mean, I think a lot of times when people are trading, what they do is they take their account and try to they try to make everything in one day, right? And so they're on edge every second of every minute in the day. And you shouldn't be on edge for that reason. You should never really be on edge when trading, right? You want to have a level head. And a lot of times people's like risk management strategy is really the reason why they are acting so emotional. Because if you had $1 and you were trading $1, you were down $1 on the day, like no, you wouldn't care, right? You wouldn't care at all because you know that like, look, this is only $1. It's not a large amount of money. So a lot of the stuff that you do, it really comes, a lot of the stuff that people do when they trade is really just them being terrible with the risk management and trying to overcompensate for that fact, right? They want to come in, they see a setup, they get happy, they risk their entire account on the setup, and then they decide that it's going against them, so they're in a little bit more drawdown than they feel comfortable with, and they start acting emotionally and erratically. So it's really you're not going to get rich overnight doing this, right? So don't treat it like that. I think I'll feel pretty confident in this if we start once we come back down here and take out this low. I think we're going to be in a very good position. And also going up a time frame, this consequent encroachment on this 15-minute time frame, I want to see this violated as well, right? So this wick here,